Brian Shannon from alphatrends.net. Today is Friday, the 20th of October, 2017. Hope you had a good week of trading. The markets were quite strong here, except, of course, for the biotechs. We'll talk about that more in depth. But great performance, really, overall. And look at the performance of the semiconductors, up 37% year to date. That group right there is really kind of been the blueprint for the reason why we don't short these little shocks when we get them, like we saw on Thursday morning when the market opened on a gap lower. And as that market opened on a gap lower on Thursday, it came right down to the volume weighted average price from October, as well as a prior band of resistance, which was also support in here. So when we have a rising 5-day moving average, I talk about it constantly, we don't want to be short. Maybe we get to the sidelines, get stopped out of a couple positions, but we certainly don't look to get short. Not with a rising 5-day moving average, especially when we have a rising 10, 20, 50, 100, 150, 200, etc. We are at all-time highs, and the people who are getting hurt badly are those who do sell short in this market. So we had that shakeout on Thursday. Now this level is going to be an important area going forward over the next couple months, or I would say at least a couple weeks. We'll see how long it becomes relevant, but 254.5 really is going to be an important measure of risk. That is a place to measure risk against until we start breaking down and showing lower highs and lower lows below some of these longer term moving averages. The trend remains higher, and you're throwing your money away on the short side. Stuff just does not stick. The Nasdaq, not quite as strong. It didn't finish at an all-time high, but still had a positive performance this week. And in this case, we can see that the month-to-date volume-weighted average price was the precise low on Thursday as this market did pull back. If that level failed to hold, which was also an important, pretty important area of prior support in here, then I think we would have been looking for a deeper retracement, perhaps down to the volume-weighted average price from the September low. That's what we would have looked for. Instead, what we have is a market that still is showing a pattern of higher highs and higher lows. And of course, this prior resistance in this area is where we see that rising 20-day moving average as well. So this market remains in a longer term uptrend. If you're trying the short side, you've got to be really quick, and that's meant for day traders. And I think that that's not what most people should be doing. The Russell 2000 showed improvement this week. We had a little bit of a shakeout in there that it got down through the volume weighted average price from the most recent rally. But as I was mentioning to subscribers throughout the week, I still thought that it was a shakeout with an overall uptrend. We remain in a strong uptrend. We came down to and closed just above that 20-day moving average on Thursday, and today we're right back up at the recent high end of this recent range. So this is something that I had sketched out earlier in the day that I would like to see happen in the Russell 2000, is maybe some kind of pullback and then continuation higher. But the buyers remain in control. Consolidations tend to resolve themselves in the direction of the primary trend, and clearly the Russell 2000 is in an uptrend. It had been a sector or section of the market, I guess, that had not really participated in the rally for most of the year, and it's been playing catch up lately. And now this correction through time appears to be a slight correction through price, but mainly, I categorize it as a correction through time, seems to be resolving itself, and I think that we'll be seeing the Russell 2000 at all-time highs again. As I said, the biotechs have been the group that have really shown why you don't sell short a market that's in a strong uptrend. We've repeated over and over again the direction of the 50-day moving average would keep you out of the off the short side unless it was for very short-term trades. But again, we're above a rising 10, 20, and 50-day moving average. The pullback that we saw on Thursday came right down to a prior important level that was first a little bit of resistance on this morning and then support here. So buyers are showing up where they're supposed to in these markets. That's the sign of a good, healthy trend. If we break below these levels, let's say we see something like this next week. If we break below it, then perhaps we see a deeper pullback, but there's nothing here at all suggesting that. Keep your eye on this 96.50 and measure risk against that level. The group that got hit hard this week was the biotechs. And let's clean this chart up. Let's go over here to this time frame, which is it's 78 minutes. It doesn't matter, but it's equally divided by with a 390-minute day. The point is here that we got bullish on the biotechs as they broke above the volume weighted average price from the prior peak in September. This is where we got bullish. And then as this group broke below that, I got a lot more cautious and got out of my long side. And this week we were looking for the potential of a turn back higher. We were looking for it to get above and hold above the volume weighted average price from the recent peak. That didn't happen. Instead, what we saw was that they were kind of stuffed here once again, and then with a lower high. And in that time frame, when we saw that happen, we had the declining 5-day moving average to tell us not to chase that. Instead, the biotechs rather broke down again, and they're in trouble, at least from an intermediate term perspective. The most likely level of support to be found right now is probably near that 50-day moving average. I wouldn't be surprised to see a test of it. And then actually what would really be good to see would be a test slightly through there, and then perhaps it could start to accumulate and then move higher again. But it's tough for the group when you see, a stock like Celgene, one of the bigger leaders in that group, getting annihilated like it did today. Maybe not annihilated, but certainly it damaged the weekly chart by making a lower low and closing below all those longer term moving averages. This is a broken stock that's going to need time to heal. I'm going to tell you that each and every day I talk about low risk, high probability setups for swing trades. That's what we do at Alpha Trends. So take a look there. Also, if you are in Las Vegas November 4th, I will be speaking at the Traders Expo, so take a look at that. A couple stocks to keep an eye on, maybe instead of biotechs, if you want drug exposure, would be Eli Lilly, for instance. Look at the weekly chart here on the Eli Lilly. This broke past 2-year highs and is holding up nicely, and today got moving from a little bit of consolidation. And then you also have a stock like Pfizer, which hasn't really done a whole lot in the last few years, but broke some resistance a couple months ago and continues to move higher. So maybe those are some good areas. But as far as individual swing trade stocks, take a look at alphatrends.net. That's what I do each and every day. Thanks for tuning in.